What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 27th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to cut right to the chase and talk about cryptocurrency markets and the recent correction that we've had. And I really want to say that I appreciate your guys' patience. I was gone on a trip over the last few days where I was away from my computer, away from electronics, as I was camping with some friends in California. I wish I would have made it a little bit more clear, talked about it a little bit ahead of time, but I did talk about it in my last update. Anyways, we had some videos that I posted over the last few days, but they weren't really in relation to the market, so I want to go ahead and talk about that. All right, so we can obviously see most cryptocurrencies across the board in the red. It's been this way really over the last few days, around 3 to 4 days since we've had really the severe kickoff of this correction. Market valuations over the last week have dropped near between $50 to $60 billion across the board in overall market valuation. A decent chunk of that coming out of altcoins, but the interesting thing that I'm still taking into mind here is that really even over the last week and stuff, there isn't much of a change here in market dominance. In fact, the thing that I'm noticing here is that we're setting lower highs every time on Bitcoin dominance, and we're starting to see some shift in market dominance towards Ethereum, XRP, and a few select altcoins, some of which are the ones that we've been watching here on the channel to be good plays in 2020. But again, you know, to denominating that and stuff in that case, taking that out of the equation, pretty much all cryptocurrencies are setting new USD lows in this case, right? Bitcoin, for example, in the 7-day period had around a 26% correction from top to bottom, and this has played into a broader correction from the highs here, which is around a 45% correction from the highs, right? We set our highs at around a little bit under 14,000, now going all the way down to a new low of 7,600. Okay, so taking this into perspective, we've been in a 3-month correction here. We broke through the wedge here. Again, the wedge that I've had here from the line of support and resistance. Again, something that we had discussed here on the channel quite actively, that markets were waiting for a catalyst moment. And this was leading up to a pretty prime event, which was the launch of Bakkt and its Bitcoin physically settled Bitcoin futures. And so we had a lot of things going on and a lot of anticipation going into this point where it was either going to be that Bitcoin could hold the resistance, Bakkt had a successful launch and price broke out, or in this case, we continue to hit resistance, continue to set lower lows here, and we eventually have the pressure fill through, no buy side activity on Bakkt, and a decline through, which is more or less really what happened, okay? So now that we're taking a look at Coinbase here, I want to go ahead and take the longer term time frame, guys, because this is not the way that I trade. I don't like looking at the daily chart. And one thing I think that would be so helpful right now, I think a lot of people didn't click on it because it's not a daily update, and it's also not relevant to talking, well, it might not seem relevant to talking about the current price section, but it is extremely relevant because I want you guys to understand how I view markets. If you're willing to listen to me talk day in and day out for 15, 20 minutes, which I do appreciate and I love, I would hope that you guys would watch that how to become a macro trader video, because that'll explain how you can spot warning signs like this, the things that I look at personally as a trader in order to spot when these corrections aren't over, and that we have to keep open to the idea that things can go both ways. I've gotten a lot of comments talking about me being a permabull, and in fact I'm not, and I haven't been over the last few weeks. I'll show you some of the signs that I look for that had me a little bit cautious, as I talked about on the channel, that there was a chance as we went through this wedge, it's a neutral indicator, it could go to the downside. I wasn't saying that it was guaranteed to go down there or anything, but I was keeping open to it until we had that catalyst, and that's what we got, right? So let's go ahead and take a look at the weekly, right? And I'm also going to jump over to the BLX chart. Now the price will be a little bit different here because we're taking a look at an indicator that only shows the closing price of the recent trading day. So it's going to be yesterday's closing price. Either way, though, we're taking a look at the weekly time frame. Doesn't really vary much things. As we take a look here, let's go ahead and take a look at the suite of indicators that we had, okay? So the first thing that I look at is my 3 sets of indicators here on the weekly. Now again, you can have your own custom suite of indicators. These are mine personally. In my recent trading video that I talked about on how to become a macro trader, I talked about what I look for. I usually look for 2/3 or predominantly 3 out of 3 of my indicators pointing either to being bullish or bearish before I make a certain kind of trader position or I have a certain tone on markets. First one here is the squeeze momentum. And for me, again, I use these indicators in my specific way. You guys can use them how you'd like. I personally use it in this way. When the squeeze momentum sets a lower high or a higher low here, that's when I see a trend reversal coming. So for example, as the market's moving higher, squeeze momentum indicator, which is again showcasing momentum in price and in the market, as it's going up in this case, you're going to see the squeeze momentum go up. And when we start to see that decline, as we did here on July 8th of 2018, which on its weekly candle set a relatively high level close to the highs back here in June, then I started to feel a little bit cautious. Another thing as well is that the divergence in the MACD slowed down back here as early as May. We were starting to see a decline there. Now, I wait for the cross to really get bearish here, but this can be an early warning sign that the divergence here, the momentum for the bulls and the buyers in the market is starting to decay off. We had these warning signs very early on, and we even had a cross on the MACD here in August before this sell-off. So that should have been, again, another flashing sign of caution. And then here as well, on the weekly, on July 15th, 2019, at the price range of around 10,400, that is where we, again, set a level in, where we started to enter into the neutral zone here on the stochastic RSI. Okay, so this is my three indicators. These are my three indicators that I watch. This is how I use them. And we basically, to explain for this stochastic RSI, once we get both lines here in the neutral zone, that's usually, if it's going downward from the high range here, that's bearish. And if it comes from this lower range back in the neutral zone, it's bullish for me. It means the momentum is picking up. Okay, so the indicators were giving us that. We obviously had the price analysis as well, which is step 2 in my analysis of how I actually do TA. And in the technical analysis portion of things, in the sense of price, we had the wedge going through. We broke through that wedge. We were setting continuous lower highs. The lows here were rising at a slower rate, right? So the resistance was weighing in heavier on price. So in this case, we had a lot of things pointing towards, a possibility of a correction. We can take a look at the daily as well. And on the daily, notice on the volume here, volume was pretty much non-existent. Now, we have to really talk about as well the overall fundamental catalyst that everyone was looking forward to, that would either be a make or break moment. And that plays into our third portion, which is understanding the trend, right? Why would Bitcoin break out? Why wouldn't it break out? Well, the catalyst was obviously backed, right? That is at least what is the general narrative right now. We don't have much else to work with. It was kind of, the wedge was leading up to the back launch. Kind of makes sense, right? It's a pretty decent narrative to understand that, backed might have been either a make or break moment for Bitcoin. But backed had a really slow launch. And as it tends to be with markets, people have very high expectations for when things launch, when in reality, expectations of what can actually come into fruition over time should usually be drawn out much more longer term, because things take time to really, again, develop, become popular, for trends to start to formulate. And that's a perfect case here with backed. That's exactly what happened here. Everyone was expecting that every money manager in the world, whether it be pension fund managers, institutional investors and banks, whatever it may be, that every single Wall Street fat cat was just waiting, he's puffing a cigar, just waiting to buy Bitcoin, because they somehow understand censorship resistance to every bit of scale. They understand the in-depth of blockchain technology. They understand that this is an emerging store of value. No, they don't, guys. Not yet. Not yet. They don't understand it yet. Most people, there's a really good article here from CoinDesk, and they did a really nice interview with this individual. I'm trying to get his name, David Nage right now. David Nage. And he did a really interesting point, he stated a very interesting point, which is that when it comes to Bitcoin, Bitcoin is still highly speculative to most people. Most people see it as, I buy it and I hope it goes up in price, right? And it tends to be that when people buy Bitcoin, they tend to buy it when everyone else wants to buy it. When the trend has gone, to new highs in this case, right? When price is ticked up past 20,000, at least in our scenario, and is starting to really pick up momentum, right? That is when institutions are going to really get interested in Bitcoin in this cycle. We are still a very heavily retail market because this is a very tech-based market, right? And we've seen this actually in most traditional tech sectors. I mean, you think about some of the major tech companies. I mean, there's obviously been institutional investment through VCs, but these are people who are specialized in it. Wall Street gets involved in things when it gets to the IPO stage, when it's later phase in the seed rounds for investment, and they're only doing it because they're almost kind of forced and told that this is the way to go. This is the new form of tech. It's very difficult for traditional investors to get technologies like Bitcoin, right? We can see here that the volume was quite abysmal here. I mean, we'll go ahead and get the statistics here. At press time, 10 or so hours later from originally writing this article, only 28 contracts have been traded with just one at a sub price of 10,000. So there's nowhere near like the hundreds to thousands of volume in Bitcoin that people were expecting to really add liquidity to the system, even though these are physically settled, right? We need the liquidity. We need traders to actually be trading it. And we really did not get that. And this is something, again, that Joseph Young brought up here. You know, I think we need to have some reflection here, right? Bakkt itself is not going to be a blowout right away, just because, you know, investors have the opportunity now, retail and institutional, to trade physically settled Bitcoin futures. Again, yeah, of course, they're not going to just leap on it right away, right? If they really wanted it that bad, retail investors could go and open up an exchange account, and institutions, you know, to varying levels of institutional traders, you could trade GBTC, you could trade Bitcoin futures, right? The real thing here is that we need to have a solution for money managers. Either way, Bakkt is a great first step to opening up and expanding the liquidity of the cryptocurrency space. And that's good to see that. It's going to take a while for this to actually materialize in price and to get real volume coming through. The nice thing is that this has really set a good precedent in the sense of opening up different players in the cryptocurrency ecosystem actually more in traditional financial markets. My apologies on that. In traditional financial markets to offering cryptocurrency services, right? This is going to push more competition. It's going to showcase that there is an opportunity now to do this in a legal and compliant manner. And that's really exciting. I'm excited to see more competitors come to the pool. And more importantly, as I've talked about, why I believe an ETF is usually better in this case, is that having these different entry vehicles built into platforms that people are comfortable with, right? Again, not everyone is comfortable trading futures contracts, especially a retail investor. That's not a common thing. You know, if you trade futures, you're likely someone who is an active trader or someone who understands financial markets in depth. The vast majority of people don't understand it. The vast majority of people still don't understand Bitcoin. So taking those things into mind, this shouldn't come as a surprise, right? And once we saw the break on the wedge, I think it materialized on price. So again, would recommend you guys check out this video by CoinDesk. I think it's a good one. You guys can actually take a look at Bakkt's website and get some data on the actual product itself, as well as some data in the sense of you know, the current contract price, as well as the volume trading through. And again, there's some volume coming through, but at the end of it all, guys, let's go ahead and talk about what's substance here, what really matters. I don't want to ramble on too much. The major thing I'm looking for here, again, and I'm going to be watching it on the weekly, is one of two strategies, and I'll tell you which one I've been following. I told you all a while ago, and if you haven't heard it, that's fine, guys. I definitely will reinstate it here and make it very clear, because I think a lot of people are probably watching this video. My major point here is that in my personal way of approaching this market, I've decided that in this cycle, I'm averaging in. I'm not trading the market. I'm not trying to trade the ups and downs here. It's just personally not what I'm trying to do, okay? Timing crypto markets has proven to be a little bit more difficult this time around. What I'm doing, though, is I'm following history. Anytime I get anywhere from a 30 to a 40% correction, I'm adding in. And if you guys haven't noticed yet, because I think so many people are just in absolute pandemonium and they're looking to sell, we've had around a 43, actually if you add in the absolute top and bottom here, I think the actual percentage is exactly around 45%. 45% correction, 5 percentage points away from a 50% correction happening in price. You know, one of the things that just, it makes me so upset because I see so many traders fall into this trap, and it's why I think most people shouldn't trade. I'll say that outright. I really don't think most people should trade. It's not financial advice. You have to determine for yourself. The problem that I see is that when people go to a store, they're absolutely willing to wait sometimes. A lot of smart consumers will say, you know what, that good a product isn't going to be any worse a few months from now. I can wait. I'll get it at a 50% discount. Or when they go to the store, they love seeing a 50% discount on a product or service that they like to buy commonly. And it seems to be that with markets, because there is an element of making profit, of growth, of excitement and greed, that a lot of people are completely fine buying up here. I remember the huge wave of previous retail investors who were active in crypto finally came back, and they were willing to buy at 12 to 14,000, and they sure as hell aren't willing to buy here at 8 to 7,000. That doesn't really make much sense, because your risk to reward profile here, if you believe Bitcoin is going to go to 20,000, higher levels in the long term, is much more favorable here. If you believe that Bitcoin is going to hold on the logarithmic line of support here that it's held ever since it started back here in 2011, really trading on liquid markets, even back as far as 2010, right? And then also it's a discount. You're paying pretty much half the price. So in that sense, I have actually decided, and I want to be clear with you all in this sense, I haven't just been simply averaging in. I averaged in back here when we started to correct because we got into the 30 to 40% correction range. But I actually stopped adding in when I saw my indicator showcasing this was going to enter into a further decline. When the MACD crossed on the stochastic RSI, went into the neutral zone here, when we started to see a slowdown on the squeeze momentum, I pushed off. I stopped averaging back here in mid-August. But I will certainly be averaging now that we got the correction, right? This is enough for me. Historically, corrections usually only go around 30 to 40%. I'll take my 45 to 50% correction, and I'll start averaging in whenever I get the chance. Now, in the sense of the overall market here, in the sense of someone who might be actively trading, should you rush into the trade? Probably not. What I would do as a trader, as a swing trader here, as I usually do as a macro trader in most cases, what I'll do is I'll wait for a pop-up here on the squeeze momentum, the divergence to slow down and actually shorten, in this case, between the two moving averages, and then also for the stochastic RSI to pop up. I really only think you need to see 1 or 2 weeks of neutral to slightly upside price action to get that, but we're going to wait for that. We're not going to rush it, guys. We're going to wait till the trend formulates. We're going to wait for the signs to come through if you're trying to trade this market, right? And that's what I would usually do in most markets. The thing is, the reason why I average out in crypto markets, guys, is because for me, it's where I'm most exposed right now, and I'm trading for a much broader and long-term cycle. I'm not fretting over price in the short term, right? I'm taking any cash positions that I can get over the next few months, and I'm taking a good allocation of that and putting it into crypto. Not all of it, but a good amount into crypto, because I believe in the longer-term cycle here, and I don't think we're going to get many opportunities like this, which is why I don't try to actively or overly trade this market, all right? So, anyways, that is going to be it for the video today, guys. I want to let you all know that I think this is a very important video to go through, but more importantly, you guys should watch my video on how to become a macro trader. Yes, it's long. It's about 40 minutes, but it's really not 40 minutes. You can just watch the first 10 to 15 where I talk about how I actually utilize my indicators, the 3-step process that I go through, and along with that, some examples if you want to stick around for that. I really recommend you do, because it's good to kind of get some practice seeing it, and then you can start to test it on your own. And it's not a perfect strategy, but I think it's something that's a good starting point for a lot of people out there. And it'll showcase how looking at the weekly time frame is so much better than the daily and the hourly and the minute chart. It's much less stress, much better results for the average person. And again, it's just food for thought, right? You guys will have to determine what you want to do. But overall, I hope you all are doing well. One thing that I want to showcase with you guys as well that you guys might know about, I've got some conferences coming up. Down below in the description, I've got links for all these conferences with discount codes if they're available. We've got the Delta Summit, which I'm actually flying out to on Monday, and it's going to be going from October 2nd to the 4th. So this is going to be one of the biggest blockchain cryptocurrency conferences of the year. Litecoin Summit as well in Las Vegas coming up between the 28th to the 29th of October. And then also the CoinMarketCap conference at the Capitol, which is going to be from November 12th to the 13th. I will be speaking at all 3 of these. I hope to see you guys there, and I know we've got more conferences coming up. So if you want to see if I'm coming to your area, keep an eye out on the description down below in the conferences section. But anyways, guys, that's it for the video. I've talked on enough today. I'm glad to be back here in my studio. And even though the market has definitely been through a steady correction in the last few days, guys, I would say that I hope you don't lose confidence in this market. I sure know I haven't. I haven't changed a single position that I have in the cryptocurrency space in the sense of I haven't sold anything. I'm still long in the market, and I'm going to be averaging in on this dip because I'm trading and investing for the longer term cycle. Anyways, guys, that's it for the video. Thank you all so much for watching, and I'll see you all in tomorrow's update. Stay tuned.